interest rate projections for the rest of 2024. I'm going to tell you where they're going, why they're going there, and why we've been right and wrong leading up to this. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates, putting out weekly videos on all of the topics. Before we dive in today, I'd be forever grateful. Hit that subscribe button, over 97% not subscribed. Click that like button and click that bell icon to be notified. Now, let's dive into the interest rate conversation. It's May of 2024 when we're making this video. And we have seen a ton of volatility and movement in the last, to be honest, week to 2 weeks. But on top of that, just over the last 90 days. In January, we saw a nice little low coming off of highs in October, November of 2023. We saw these nice lows. We actually started some refinances. Again, I'm in the mortgage world every day. I have a business a little bit over 10, 12 years old now, work in the Chicagoland area. So this is coming straight from what I see every single day in my business. Now, saw some of those refinances in January. Then all of a sudden we saw some inflation data and some other data points that really said, hey, we don't have a good handle on inflation, and we saw rates start to rise. Now we get into the month of April, which was really a turning point in my mind. And the reason being is the Fed, or the Federal Reserve, has told us that they're likely going to cut rates in 2024. So they don't tell us when until typically they actually do it, but they told us it's coming. So the assumption was that it could come as early as summer. That narrative or thought process got pushed into fall. And more recently, just in this past week, they came out and said, hey, we're not going to hike it, meaning that they're going to even increase it potentially, and that a rate decrease is coming, but likely it's going to be towards the end of the year into 2025. So they're giving us the playbook. Now, they provided the same playbook before, but they're essentially pushing it out a few more months. So let's talk about real numbers. Now, I look at Fannie Mae and their housing projection. They put out a housing projection every single month where they look at unemployment rate, housing, mortgage originations, interest rates. What a great chart and kind of data point this is for people to be able to look at. And the reason why I think it's a good one and important is Fannie Mae is the largest government-sponsored entity buying up mortgage-backed securities in the secondary market. They're huge. They employ a boatload of economists and people looking at these different data points. Some of the other associations that follow this, let's say National Association of Realtors or Mortgage Bankers Association, that's a membership-driven community that wants to put a positive spin on everything, right? So like Mortgage Bankers Association, my world, of course we want to show super positive interest rates if they're right or wrong, right? Just as a whole, the mentality is we want to show a positive outlook. When you come to Fannie Mae, they're just trying to be right. They don't need to be right, wrong, indifferent. They don't need to be positive, negative. They are a really good indicator without kind of an impartial view of what is coming. One of the data points that I saw when I was looking at it, and again, they're now projecting in terms of those real numbers, low 6% range here at the end of 2024, and then decreasing down, and they basically have 6 flat or 6% even by the end of 2025. So where are we today? Well, in the last week, again, I just mentioned we had a couple bad days, then we had some good information come out, including the Fed. And then today, Friday, May the 3rd, making this video, we saw additional information that basically told us that, hey, we are going in the right direction in terms of lower interest rates. Might not be positive for the equity markets, but good for interest rates. So let's summarize in bigger picture. We are in the 7s. We are likely going to see 6s sooner rather than later. We're likely going to see mid-6s by summer, late summer into fall, as some of this more data points show us that this playbook is getting executed on, or we're seeing these lower rates. Once we hit that that rate decrease from the Fed, that'll be a real big day, because now, if you ever heard the, put money where your mouth is, right? Actions speak louder than words. Any other cliche you want to throw in there. Now we're going to be able to see, hey, they really are doing what they say. I'm going to stop here. Do you think that's correct? Do you think they should be lowering interest rates? I'd love to hear your comments below. Now, as we get into 2025, now we start to see rates in those, let's say, starting in the mid sixes. Looks like they go from 6.4 to 6.2 all the way down to 6.0 by the end of 2025. Now we're starting to see that slow progression down. So there's a ton that could happen, for better, for worse, but would love to hear your comments below. Where do you think it's at? I feel that affordability for my buyers out there in the market all the time. It is a struggle. It is difficult in this market, especially as a first-time home buyer, to have rates at this level and have affordable homes after the appreciation that we've seen over these last few years. So if you made it this far in the video, click that subscribe, click that like, click that bell icon to be notified. Stay safe, and we'll see each other again very, very soon.